Hello friends, in the series on the income tax cases, today we will discuss the case of Principal Commissioner of Income Tax versus Trigent Software Limited. This case has been reported in 457 ITR at page number 765 and the matter has been decided by Honorable Bombay High Court and the date of the judgment is 2nd December 2022. In this case, a very limited issue was before the Honorable High Court. The facts of the case are like this. In this case, the assessee was in the business of software development. And the assessee was selling the softwares after developing its product as a software. The assessee has incurred huge expenditure on the development of a software, but unfortunately, that software project has to be left in abandoned and that project was not completed, and the assessee has debited all the expenses to the profit and loss account and claimed it as a revenue expenditure. When the assessment was going on, the learned assessing officer was of the opinion that this expenditure is not a revenue expenditure and it should not be allowed under section 37 subsection 1 and it is a capital expenditure. Accordingly, the assessing officer made the necessary additions into the income of the assessee. The assessee has already got the relief from the ITAT. The department as usual moved to the High Court, and when this matter was before the Honorable High Court, the court said that to draw a line between the capital expenditure and a revenue expenditure is very difficult, and there is a very thin line of distinction between the two, and sometimes the factors are overlapping. So in that case, whether a capital expenditure is a revenue expenditure or a capital expenditure depends upon the facts and circumstances of each case. The court said that generally when an expenditure is incurred for bringing an asset into an existence, or the expenditure is of such a nature that it gives an enduring benefit to the assessee, then the expenditure may be termed as capital expenditure. At the same time, the court said that the test of enduring benefit is not a conclusive proof to prove that whether an expenditure is a capital expenditure or a revenue expenditure, and the facts and circumstances of each case may determine the nature of the expenditure. At the same time, the court said that it is the nature of the advantage from the expenditure which is material for determining an expenditure to be capital or revenue. The court further said that all those expenses which are done for facilitating the assessee's trading operations and to do the business more efficiently and profitably, all those expenses are generally revenue in nature. So on the basis of these general guidelines, the court said that in this case, the assessee has incurred huge expenditure on software development, but unfortunately the software project has to be kept in abandoned, and in these circumstances, whatever the expenditure has been incurred for the software development should be allowed to the assessee as a revenue expenditure. The court said that because the assessee is not getting any further benefits, any future benefits, any enduring benefits, or neither any asset has been brought into existence because of this expenditure, so it cannot be said that this expenditure is capital expenditure, and the Bombay High Court dismissed the appeal of the department which was against the order of the ITAT. So friends, whether an expenditure will be treated as revenue expenditure or capital expenditure, it is a great deal to determine this thing, because sometimes it happens that there is a very thin line of distinction between the two and a lot of factors are to be seen before taking the decision. At the end of this video, once again I am repeating the name of the case. The name of the case is Principal Commissioner of Income Tax versus Trigent Software Limited, and this case has been reported in 457 ITR at page number 765. The matter has been decided by Bombay High Court and the date of the judgment is 2nd December 2022.